Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and this is a special edition technical analysis commentary for today, the 4th of April 2025, on the E-mini S&P futures. This commentary is a follow-on to my earlier video commentary made on the 7th of March this year, when I saw, and I quote, "A noteworthy milestone was achieved at close of business yesterday. For the first time since October and November 2023, the market significantly closed below the slowly rising gold long moving average." End of quote. The long moving average is currently at 58.33. I also said at the time, and I quote here again, "So, is the current situation set up for a fall?" Well, in my opinion, no, or at least not yet. I would rather think that this move down and low close, and please remember, we've had only the one proper close below the long moving average so far. This move down is not on its own the signal for a move back down, but it does help set up the conditions where such a signal could appear. End of quote. You can see my earlier video in full on the ADMISI YouTube channel, and I'll also produce the link in the description here below as well. So what has happened since, and why have I been prompted to make another special video edition, only a month after the first one? Let's look at the chart to see why. Now, prices did continue lower after my earlier video, but the move down soon ran out of steam and halted at the 5500 level, turning higher in mid-March, even making a gapping move higher last week. However, two things to note. The move up also ran out of steam last week at what I had identified as the key gold long moving average overhead, currently at 58.33. Additionally, we had a dead cross 2 weeks ago of the short medium moving average, currently 59.33, down through the medium moving average, currently at 59.76. Admittedly a lagging indicator, but still a significant point. Since the middle of last week, prices have headed erratically lower, but I was not minded to say anything as there was the possibility that we would form a double bottom over March and early April. The key level to watch out for, to my mind, was the low in March at 55.09. To slow down and hesitate there, or near there, and we could see the construction of a possible bullish pattern, or at least a possible bearish cat's ears pattern, which would take us into May or June. Yesterday, the market did not hesitate at that 55.09 or anywhere near there, and we saw prices punch down through the 50% Fibonacci line of the January 24 to February 25 move at 54.34, and eventually closed right on it. Though this was only the one session underneath, the move down was enough for me to retire the idea of a double bottom pattern or any other based on the 5500 level, and instead look at the whole mid-February today action as a bearish halfway hesitation with a potential target X down in the 5200 zone below. This was the first bearish pattern I have seen here for quite a while, but there is more. You see, whilst we have some closes around the 5200 area back in early August last year, I'm minded to think that perhaps we may move down to the next significant 50% Fibonacci line below, the one for the October 23 to February 25 move at 51.45. Now, this is not verified, but if we do travel as far as 5200, it would seem reasonable to push that little bit lower. The question is, how do we get there? For this, I was initially tempted to utilize an acute bearish Andrews pitchfork for the February to March action. However, I've been minded to temper that into what we now have on my daily chart. A shallower, though it may not look it, a shallower dark blue bearish shift pitchfork to show the bearish angle of attack. Now, this is still a nascent pattern, so I may finesse it further, or retire it completely if I thought it appropriate. But for now, I would suggest watching and utilizing this bearish pattern. Today we are in between the overhead dark blue middle time, which is currently at 55.11, and the dark blue lower time below, currently at 52.91. Thank you for watching and listening. This special edition broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.